Great name. KITS Eye Care, they sell eye care products over the internet?
Correct, yeah. They're predominantly an online eye care retailer. Now, what's important to remember with KITS is that they are vertically integrated. So they own their own production. That's a little bit unique compared to the roughly 40 to 50% of the market, the $70 billion category that's represented by independent opticians. And these are opticians that are usually buying their product from some other middleman. Well, the fact that KITS is able to manufacture the product themselves means that they're able to provide a high quality pair of eyeglasses, sunglasses, contact lens to a customer at a significantly cheaper price. So KITS, for context, they charge about $38 per pair for a pair of their branded eyeglasses.
Prescription glasses?
Correct.
That's
$38.
pretty cheap.
I would agree. And they also provide pretty frequent promotions when it comes to premium lenses, for example, or lens coatings, that sort of thing. The main takeaway, though, is that KITS is able to provide this at a significantly cheaper price than are some of the other competitors, the independent opticians. But also think of Warby Parker, even another online-focused eye care retailer as well. They're able to provide a high-quality product at a significantly lower price, and also it shows up to your door within a day or two as well. It's very difficult for another competitor to come in and replicate that customer value proposition that KITS is able to deliver.
Are they just in Canada or are they international?
They're in the US as well, so roughly 70% of their business today is in the US. But what's really interesting in our view is that the way that KITS has grown over time has been investing in this customer value proposition. And what I mean by that specifically is any savings that a customer, that KITS has been able to generate within their business has been passed on to the consumer. They haven't invested very heavily in consumer marketing. They've only begun to do that more recently and only focused within Canada. So even though they've generated close to 30% average revenue growth on a year-on-year basis over the last 8 quarters, that's not really been a function of them spending very heavily on marketing. They're only recently starting to take that up a little bit. And the results they've seen thus far are fantastic, and that doesn't really include material efforts in the US. We see that as expanding the runway for growth for them also over time.